All right. We can kick it off. I think how we're going to structure this is first half, we're going to select from some of the prepared questions that we already have that were submitted in the Discord. And then we'll open the floor to questions, and then we'll take it from there. So thanks for all coming. It's exciting to have you today on the platform. We wanted to give the community, of course, the floor to ask the team questions about the new Incentivized Testnet Ambassador Program, and any other questions that you might have. You've got our co-founders here, Kevin and Unique, who will help answer some questions. You also have Sanka here that's listening. And then you have marketing lead Jesse, and then myself, who helps lead BD. So we've selected some of the questions from Discord. Make sure to ask questions as the AMA progresses. You can find that within the Discord link if you go to the AMA questions channel within our Discord. So first question comes from 4BBY. How will Nibiru evaluate the success of NIT1, and what specific metrics or benchmarks will be used to determine whether the testnet has achieved its objectives?
I can take this one. So that's a good question. Our goal with the first incentivized testnet was to validate the infrastructure and make sure that everything is robust, given a certain number of scale. So things that we're looking for are the number of nodes on the network, the number of validators on the network, and how that works with our lower block times. You might know that the Cosmos SDK chains usually have block times around 5 seconds, but we dropped ours to 1.5 to 2 seconds, and we wanted to see if that had any effect on the slashing rate specifically. Other things that we're looking at were like the stability of our RPC infrastructure, so like our faucets and how well our web app communicated. We weren't expecting the amount of load and traffic that we received for the first incentivized testnet, so it really made us like gear up and taught us a lot about scaling out our infrastructure and preparing for the second one. So that's already great learnings there, and also to just get a sense of like the community and how people react in Discord and how people help each other out. So those are some of the main things that we're looking for the first incentivized testnet. We've already documented a lot, and we're already preparing for the second incentivized testnet in a few weeks.
Got it. So in summary, like the number of validator nodes, block times, slash times, community sentiment, RPC nodes. That sounds great. So moving on to the second question, also from 4BBY. Can you provide more information on the eligibility requirements for NIT1? So that includes what KYC procedures participants will need to pass, and alongside that, any restrictions on claiming rewards for participants in certain jurisdictions.
Yeah, I can do this one too. So for NIT1, anybody can participate. Anybody can go to the faucet, get tokens, and then start using the web app or send transactions onto the network. The only part that will require KYC is if you do the tasks and you get the points. When Mainnet launches and you claim the points when you redeem the points for lock drop tokens, that's when we'll KYC. And we do that because we're trying to follow like legal guidance and best practices here. Other big chains like Aptos also do this too at mainnet time. So United States is one of the very restricted jurisdictions. The full list is on our website. If you go to nibiru.fi and scroll down to the bottom, there should be terms and conditions. That has a full list of restricted jurisdictions that may not be able to receive NIBI tokens lock dropped at Genesis time. But we're actively working with legal counsel to figure out if we can still incentivize users outside of NIBI like lock drop tokens.
That makes sense. Nothing too out of the ordinary for a derivatives protocol. Just a reminder for everyone that you can post live questions and then we can also answer them. So you can find that within our Discord community. There's a channel under community called AMA questions. So make sure to utilize that and we'll be reviewing them live. So the next question comes from Cap Cosmos. How do you think the success of Testnet will impact the adoption and perception of Nibiru in the broader crypto community?
Take a stab at this one. So something we wanted to avoid was attracting users who are primarily interested in just receiving free tokens rather than actually using the protocol. As with what happens oftentimes for airdrops, these users may quickly sell their tokens and drop the token price. And not to pick on airdrops, but in particular, they also attract like spam and fraudulent users that aren't genuinely interested in the project. So we figured that a series of incentivized testnets would be a good way to find active community members that aren't just trying to exploit the reward mechanism. Also, a lot of the ITN is done in the spirit of launching, not being something you do just once, but a continuous process that you do again and again. So when we took a look at our intended roadmap and how to incorporate a lot of user feedback into that process, a multi-phase testnet seemed like a great way to code with the garage door open, so to speak. So we basically mixed our engineering timelines with the community initiatives. As for the aspect related to the broader community, I think sticking concretely to ITN timelines is a good way to show the ability of our team to execute on our commitments, especially when you add community growth and marketing into the picture.
Yeah, it sounds great. Let me pause for a second for your Jesse.
Hi, everyone. Just want to remind you that if you want to ask a live question, on your screen, you can go to, there's a comment icon. So just click on it and reply to the thread that we have on Twitter. So we'll see that in real time, and we can also later answer your live questions. We can go to the next one. Thanks.
Next question, also from Cap Cosmos. Nibiru's Oracle module is a critical component of NIT1. From your perspective, what are the most significant challenges in building and testing an Oracle that can accurately determine the exchange rates between pairs of crypto assets?
Sure. So I would say data accuracy, right? So having the right sources to make sure that, one, they're not easily manipulated or incorrect. So feeding in a lot of stuff from centralized exchanges is probably a good bet because there's a ton of liquidity there. Also for front running is one challenge with designing the Oracle. So similar to Terra Luna, ours has like a commit reveal scheme. So front running isn't really as much of an issue, but that has been the cause of some major exploits in the past. There's also that governance voting could be manipulated. And then obviously latency and market volatility are kind of the same point, right? So if prices fluctuate quickly within seconds and the Oracle doesn't update, that can be exploited for significant loss of funds. On just the perp module, it's not as much a concern, but for the stablecoin, since it's designed really similarly to Frax, it was really important in our case that like the latency be pretty fast. So I think it's set to 5 blocks or 10 blocks. I'd have to double check the params, but so that means it's about a 10 to 15 second update time.
Yeah, the time of 10 to 15 seconds versus what Chainlink has mentioned in the range of 20 minutes and MakerDAO in the range of an hour is pretty significant. So the next question comes from Naked Cat. For Oracle staking, do we need to stake to more than one Oracle node? How do you confirm that nodes are really Oracle nodes? What about staking to your own nodes? Is this okay? Are the node specification for oracles the same as those for non-Oracle nodes?
Yeah, I can take this one. I guess like all the ones regarding the incentivized tasks fall onto me today. So, yeah, we added a task in the incentivized testnet that you had to either participate as a oracle or price feeder for the network, or stake to a validator who is doing that responsibility. You don't need to stake to more than one. Just staking to one is enough, but there is some requirement where that validator oracle has to be active for a certain number of blocks. So if they're like only active for a short amount of time and then they stop posting prices, or they get jailed or kicked out of the active set, then that doesn't count. And the follow-up question to that is how do you actually verify that an oracle or a validator is actually an oracle as well? So an oracle node is just a super validator that's also posting prices. And what we saw in the Explorer and in our testnet is that people started putting like checkmark oracle next to their validator names. But of course, that's not like anybody can just modify their moniker and do that. So we're actually working on a feature in our front end in our staking page to show which ones are actually posting prices, and that will also show like how long they've been posting prices for and what their slash rate is. So that should help users like choose which validators to stake to. Right now, the hard answer is you have to just query the chain directly using like a CLI or one of the SDKs that we provide to see which validators are actually posting prices. But we're adding it into the UI. We're working on it. And for actually the nodes themselves, the actual hardware, the price feeder implementation that we wrote is very light. I personally think it shouldn't like cause additional load onto the VM or the machine that you're running the actual binary on. You can run it as like a sidecar process, and you can actually have it send transactions to localhost, or you can also run it on like a different computer VM as well. So specification wise, it shouldn't really add too much CPU and memory usage. Yeah.
Yeah, great to hear about the price feeder, and it's pretty cool that you can see which of the validators are actually posting Oracle prices and for how long in the future. Because when I log on the Explorer, I can't really see the difference myself. Just another reminder that you can reply to the thread and ask questions live. So feel free to do so. Next question comes from Staking King. This is an important question concerning incentivized testnets, which many projects do not like talking about. So now testnets are incentivized to attract users and to build a lot of hype around the project. There are two problems. If rewards are too small, users may feel that they wasted their time and that the team is selfish. Thus, they should dump and abandon the project. If rewards are too large, the project may lose funding and users may sell the rewards without actually using the project. How do you balance the rewards and incentives to ensure that neither the users nor the protocol are discouraged by the outcome?
So there's no hard rule for how to do this. I'd imagine what we'll do to figure out how much of the community distribution should go towards NIT is what we do for a lot of decisions, which is basically do research on a bunch of other protocols, like not just ones in Cosmos, but also on Arbitrum, Solana, the Move ecosystem, and figure out a fair distribution given what happened based on that historical data. That's exactly how we decided the breakdown of the token supply more broadly by actually benchmarking on Frax, Uniswap, Osmosis, Curve, Juno. Yeah. So it's kind of a non-answer, but yeah.
I can add a bit more to this too. So if you look at our tokenomics on our website, we actually allocate 60% of our total token supply to the community, which is, I think, a lot bigger than like what other protocols have done in the past. Our especially our like investment and team funding isn't that high compared to some of the other protocols that I've seen, especially on Ethereum. And the counterpart of that is like if you have too many tokens for the community, with like they're all just degens and they dump. And our solution to that is that the incentives that we give out for the incentivized testnet tasks, we're actually lock dropping them. So of course there's like all investors and team members have a long vest, at least a 1 year cliff, but we're also considering lock dropping the rewards from like the missions that we put out for ITN 1, 2, 3, and 4. And those have a vesting schedule as well. Might not be for a whole year, but it'll probably be somewhere less than that. But it's not going to be like you're going to instantly get a ton of tokens at Genesis time and then just dump it, because that will potentially hurt the protocol as well. So we're kind of like in this middle ground where we want to have a lot of tokens for the community, but for loyal community members, essentially.
Yeah, no, it's good to hear that we're trying to align interests between all the parties that are involved. So a question from Grams. Large DEX and liquidity providers are often slow given the amount of transactions that they need to process. So often DeFi platforms have to choose between security or speed of transactions. Is Nibiru able to ensure both speed and security is maintained at a high level? I think maybe Unique might be able to speak to this.
Yeah, so we didn't change the security model to make our block times and transaction throughput better. So it turns out there's a lot you can change about performance that's implicit in the current Cosmos stack if you edit the Tendermint config. So we have the same security model as like the Cosmos hub.
Yeah, and Cosmos chains are built on top of Tendermint Consensus, so that already has like a throughput of upwards of 10K TPS, which is pretty good. If you consider other like little ones like Solana, they boast a higher TPS, but they also have like a bunch of like NFT and gaming projects which take up block space. So the actual DeFi projects there are actually like kind of scrimmaging for block space, but because we're starting off with like only DeFi primitives on our chain, all the block space will be for those primitives. So the perps exchange, the spot AMM, and the stablecoin.
Yeah, I haven't really heard of problems associated with Tendermint Consensus. It's been fairly battle tested, and it's one of the most proven one that's out there. The next question from testnet activity so far. What have developers noticed are areas to improve on? I think maybe Kevin can grab this.
Yeah, sure. So I mentioned this earlier, but we really weren't expecting the amount of traffic that we had for this testnet. So we were really surprised, but at the same time, we had to really just kick in the high gear and scale out our infrastructure. So one of the big things is like our RPC infrastructure wasn't strong enough to handle the amount of like RPC traffic from the web app and the faucet. So one of the things we did on the DevOps side is just scale out the number of RPC nodes that we use, and we're also optimizing like the types of storage that we're using and the VM instances that we're using as well for that. We're also adding caching layers. So certain types of queries, you actually don't need like the most up-to-date data points, but you can have maybe like a 5 or 10 second delay and you can still have usable UI. So in that sense, we're adding like Nginx caching and possibly looking into Redis or Memcached solutions there. On another note, like I've been lurking in Discord for a while. I'm not as active as Unique, but I do read a lot of the messages. And I think one of the core complaints here is the gas config and the gas UX around using the web app. I noticed that a lot of transactions like unstaking from a delegator or opening a perps position run out of gas, and we're looking into why those operations are so gas heavy. The unstaking one is a little bit weird because we're directly using that transaction from the Cosmos SDK. which means that the defaults of the Cosmos SDK weren't enough to actually allow users to unstake. So we're fixing that. Opening a position, we do have a lot of like safety checks in place. And there are some redundancies in accessing the state, which is the most expensive type of gas usage on the chain. So we're also optimizing that. But from a client perspective, we're also Unique made these changes last week, but we increased the default gas, the gas config and the gas limit when you sign a transaction using the Kepler wallet. So when you like open the Kepler wallet and sign a transaction, you'll see different numbers for like low, medium, and high. That's because Unique made some changes there. Yeah, there's a lot to do with gas. We also had some data engineering challenges as well. So just like storing all the block data. We set up some archive nodes, which basically archive nodes are like nodes that never prune blocks. So those nodes will hold the entire history of the blockchain, and we'll use those to see who completed the tasks and the missions and will deserve the points. We're working on storing all of that in a SQL database so that it's easy to query and perform data science operations on that. Yeah, so those are the main ones. There's probably other things that I am missing right now, but yeah, if I think of any more, I'll be able to I'll write them down.
Was the gas issues related to the fact that we had a higher volume, or was that just like the default assumptions from Cosmos SDK?
We use the default values from the Cosmos SDK. It's per user gas. So like every time a user sends a transaction, certain transactions would cost more gas just because of the complexity of the transaction. So opening a purse position, it might sound simple, but there's a lot of stuff that goes on. Like you have to check the AMM price discovery to see what the open price is, calculate the slippage, calculate the margin ratio, all that stuff. So that's one thing. Another thing that we saw was like validators who are posting prices. Because they have to post prices every single vote period, which is 10 blocks, which is approximately 15 seconds. They were running out of gas also. So Jonathan Jimeno, one of the other co-founders, is working on basically adding another anti-handler check to check that if you're sending a transaction that is a post-price transaction from a validator, we actually discount the gas usage there so that oracles and price readers don't run out of gas. Because what ends up happening is if you keep posting prices as a validator and you run out of gas to send those prices, you essentially will get penalized for not posting prices later down the road. And we don't want that to happen, right? Because we want the Oracle price feeds to be as stable as possible. So in that sense, we actually want to prioritize the post-price transactions over the other transactions and give them a discount on the fee because they're kind of providing security to the network or security to the applications built on top of the network there.
Yeah, and that's cool. Maybe it's related to like Cosmos doesn't have the fact that like we have a perps platform yet, so that's sort of a void that we're looking to solve. It's nice to see that we have 8 questions now in the Twitter questions. So starting to look at those. One question is related to how has Nibiru Chain ensured the security of its smart contracts and taken preventative measures against potential hacks or exploits? So I imagine this is an audit question, but
yeah. So we adopt pretty rigorous testing practices on the chain itself and in all the off-chain tooling that goes with it. You can actually see for those like in the make file, if you run like the unit integration and E2E tests, we actually have some of the highest coverage of any of the chains in the Cosmos ecosystem. So on top of that, when we release new versions, we actually use our Python and TypeScript SDK and point them at live chains. To deploy like a new testnet on the version and then add like a lot of redundancy and test with like live transactions and look at the calculations as well. As for audits, we haven't performed one yet. We'll likely run a Code Arena audit and are in the final stages of confirming an audit slot with Zelic. So we liked Zelic in particular because they seem to do a good job of identifying like downstream security concerns that aren't obvious just from looking at one function. So since we have a derivatives product, it's pretty crucial that the audit is just as much an audit of the economics and business logic and not just the code. So yeah, so we'll in short, we should have 2 prior to launch as a minimum.
How are you thinking about auditing the different applications, because there's so many of them? Are you all going to do it at once, or?
So they're scoped, right? So let's say in the case of the Zelic one would be mostly centering on like the Oracle and Spot as one tranche, and then just wholly focusing on say the perps, and then we'll have like a separate group work on auditing, like penetration testing and stuff for the infrastructure and the web application. And then I don't know, we haven't decided what we will do with the Code Arena, but yeah, maybe we can separate it by module, or if it should be, because it's kind of a lot to audit for one team since it's like 4 major DeFi protocols all at one time. So yeah.
Yeah, I hear you. Next question from Crypto Thor. Nibiru's platform generates a large amount of data on user preferences, strategies, and behavior. Are you already using this data? Do you plan on using this data for a future source of profit?
So we do pay pretty close attention to the feedback from the community. Oftentimes we'll look for, like Kevin was mentioning, look for concerns that surface in the Discord, or query a bunch of them and look at what people say when they contact the team email addresses, and then just transform them straight into GitHub tickets and put them in our sprints. So that's actually been pretty essential ever since we came out of stealth, and in terms of giving us a rapid feedback loop.
Yeah, and the on-chain data is, well, it's a blockchain, right? It's a decentralized open blockchain, so anybody can have access to that data. We plan on like surfacing the high-level aggregate stats like total volume locked, total trading volume, open interest, daily, monthly active users, but we don't plan on tracking specific users. First of all, if you're trading on the blockchain, you're using an anonymous address, and so we can't really find out who you are, where you're from. But yeah, we have no intention of like doing what the ad companies do, and like siloing you out and like serving you ads or anything like that. Like that's not our business. Our business is to create a financial ecosystem on chain that will thrive long term.
If we did do that, Kevin used to work at Google Ads, so we would already have someone to figure that out.
There's a reason I don't work there anymore. I hated that industry.
Does this tie, like, is this a good time to sort of talk about the heart rate monitor? I know that's sort of tracked on-chain data. I don't know if it's user specifically in particular. I know we mentioned that in the update, our latest blog post date.
Yeah, I can talk a little bit about that. So the heart monitor that we built in-house is basically opens up a WebSocket connection to the phone nodes, and it tracks like events that happen on chain. So basically, it kind of like I mentioned archive nodes earlier. This is essentially taking that and putting it into a database for us to query later. So that's how we serve the aggregate stats like total volume locked, total volume traded, daily active users, etc. But we actually also use it for the liquidation engine. The liquidation engine basically it tracks individual positions, and it keys it by like the address and the market that you're trading in. So like some NIBI, one FUBAR, and then like BTC USD market. It keeps updating the basically the margin ratio and how leveraged you are by tracking the prices that are on chain. So that's another thing that it listens to. It listens to every position, and every position affects the mark price of the perps market. and that gets stored as well, so that we can have like a price graph. That's how we actually serve the price graph. That's on the web app. But yeah, that's like a internal tool that we use just to as like the ingestion point of our data pipeline.
And do you think we could repackage this later as just like a general indexer for other products that could be usable, or is this just meant for Nibiru for now?
It's for Nibiru right now, but honestly, it ties into the Cosmos SDK really well. So it uses like all the proto messages from the Cosmos SDK plus uses the Tendermint RPC endpoints. So technically, it could interop with any Cosmos based chain, and we could open source it down the road. It's just not. I don't feel it's like production ready yet. Like right now, it has a lot of implementation details that are specific to Nibiru, and if we can abstract those away into general config and make the code base a bit cleaner, then yeah, I don't see why we can't open source it.
Yeah, that would be sweet. Question here from Swalp. Nibiru shared a Gleam event for those who wanted to register for the Incentivized Testnet. How many people from Gleam will be allowed to participate in the testnet?
I can do this one since it's regarding incentives. So anybody can participate in the Incentivized Testnet because it's an open, decentralized blockchain network. The only part that will be restricted is the claiming of the tokens at mainnet genesis time. It's because we have to abide by certain legal restrictions, and there is a terms of service, a terms and conditions on Nibiru.fi. If you scroll to the bottom, that has the full list of restricted jurisdictions that will be ineligible for claiming tokens based off of the points that you get from these incentivized testnets. But anybody can participate. Anybody can set up a node. Anybody can join the network just by following the docs on our website. There would just be a KYC process before the actual claiming of the rewards.
That makes sense. Live question here from Ivar. How many phases is there going to be in for the testnet? Are all the phases going to be incentivized? Can it be run on all devices, for example, mobile, computer? What's the maximum point a testnet user can get from test nesting? Do I get extra points for redelegating my stake?
Sure. So there's, oh wait, hello? Yeah, okay. So there's 4 phases, right? So the first one is on the oracles and staking, as you've outlined. So I'll kind of jump around in answering those. So one piece was the maximum number of points. So it's essentially just that every testnet has its own sum of points that you can accrue, which it's directly proportional to the incentive rewards that you get at the end. The second testnet is more like seeing how big we can. It's basically like doing different governance proposals and seeing how big we can make the set. So we'll put more param changes and things to essentially see, can we keep a 1.5 second-ish block time with like 200 or 300 validators? Because I've seen some write-ups on some of the scaling limitations that you get with a Cosmos chain if you have too many, but a lot of the chains I see actually are near the kind of in that 60 to 120 range. So we want to just do like an empirical test and see how big we can get with that. Then for 3 and 4, the idea is to roll out a lot of like new features that are basically to optimize AMM pricing and this automatic liquidation protocol, which we have like more stuff coming out on in a later week, and then a trading competition. So there's 4 phases. All of them are incentivized, and they'll include like new releases or additions or improvements of our modules, but then also have different tasks.
Yeah, we have more detail in our latest update. I think that's also the most recent blog post. Just a reminder that you can post live in the thread. We've got 21 separate questions here. But next up, we got a question from Dean Knit. Could you tell us some of the special perks for running the node on testnet?
Sure. So running a node itself, there's many different types of nodes. There's just a regular flow node which listens to the network and doesn't really participate, but it just gossips transactions and blocks. You can run a validator node, which will put you in the validator set, and then you have to accrue enough stake or delegations to become part of the active set. And then once you become part of the active set, you get rewarded for minting blocks. One of the benefits of having your own flow node is that you don't have to rely on other people's RPC infrastructure, which may or may not be jammed with traffic. And if you have your own validator node, then it allows you to access the some of the tasks in the Incentivized Testnet. It's just good experience too, because you can run a node. It's actually not too heavy. If you set up the pruning configuration correctly, you don't actually have to use too much storage. You can even run it on your own computer, like a laptop, like a MacBook. So those are the benefits. But if you're just participating as a user of the testnet, you can pretty much do everything by either sending transactions to the RPC nodes that we host, or using the web app itself, because the web app has a staking interface where you can select validators to delegate to.
And just to add to that, there's also that's part of how we're looking at the participation of validators more broadly for like we'll probably run a foundation node and give delegations that way. So part of the validator participation is to find like who are good candidates to for us to give team tokens to for mainnet. And then also one other perk is that it's not included now in the module, but some of the fees from perp trading will actually go to the Oracle set. And then, of course, if you're delegating to them, you receive some of those fees. So the nice thing is there's like organic stablecoin revenue mixed into the incentive model on top of the oracles. So that's like an added reason to do it. It's not just NIBI inflation.
Yeah, no, good to know that you'll receive some of the returns in stablecoin as opposed to native NIBI. I know that there's a lot of other protocols that just might incentivize with token inflation, which isn't great for everyone if everyone's getting diluted. We've got a live question from Oko. What is the minimum amount of tokens that can be staked for you to be considered a validator?
I can do this one. So short answer is it's a moving target. Right now, the active validator set is capped at 100 validators. So you basically need to have the amount of stake you should be in the top 100 almost all the validators. I'm looking at the list right now, and the 100th validator has 309,052 NIBI staked. So if your validator has more than that amount staked, you will be in the active set. Yeah, that's the short answer. For the second testnet, we are going to be playing around with the validator set number and increasing it to possibly 150 or more, maybe up to 300. So your odds of getting a validator spot are higher, but you have to figure out ways to incentivize the community to stake with you. This is the game that every validator on mainnet has to do, right? So yeah, that's the answer.
Yeah, no, the 3,952 NIBI staked is pretty solid. So we got a live question from Emmanuel. Trying to learn a bit more about the Nibiru team. Can you guys talk a bit about your experience in blockchain development? I'm happy to speak about mine later on as well.
Sure. I can. Okay. So in my case, my foray into crypto was working at on the Sommelier protocol. So with that, I was working in developing on-chain strategies and data science work, and then got a little bit into protocol engineering.
What's crypto? I'm kidding. So I actually invested in Bitcoin like back in 2016. But there was a crash back then and I got burned. So I was kind of like sitting on the side of crypto for a while, just kind of butthurt from that, just like kind of lurking and like keeping up on the side. But I actually met Unique at ETH Denver last year. Not the one that just passed, but in 2022. And he kind of like convinced me to just take the plunge and drink the Kool-Aid. So I've been actively developing crypto smart contracts and blockchains for over a year now. But I've been an engineer for several years. I worked at big companies like Google and like a lot of startups in the Bay Area, Silicon Valley. So I pretty much bring like a very engineering focused technical background to the whole team. And Unique helps out a lot with like the financial part because of his experience doing as a algo trader, as well as his experience developing strategies on Sommelier.
Included within our team, we also have Jonathan Gamino. He was also the director of engineering at Tendermint, and we have Sanka, who's listening on this call. He's a MIT PhD, and he was a lead investor in Thorchain and some other Cosmos projects. To quickly introduce myself, and then we could do Jesse. I came from more of a traditional finance background, so I worked at Credit Suisse and JP Morgan, partially in investment banking for TMT. And then I most recently worked at GIC, the Singapore Sovereign Wealth Fund. So I covered venture and growth investments in both fintech and crypto. But why don't I let Jessie introduce herself?
Yeah, so I lead marketing, and I've been marketing for crypto projects since 2017. So engaged with a couple projects before, including centralized exchange, crypto wallet, and also Ideal Launchpad. So yeah, we're actually running an ambassador program for Nibiru at the moment, and more information will be released very soon. And there will also be a special track for developers. So stay tuned. You can join our Discord. Thanks.
Great. So the next question we have is from Cute Pandas. Nibiru is offering a range of rewards for participants in its incentivized testnet, including native token, USDC, NFT, and future public sale allocations. How might we think about distributing these rewards among participants, and what factors could influence the final distribution?
Yeah. So I think the most so hold on, let me think about this. Okay, so the NFTs are the most unclear part of the distribution. So that, I guess that kind of depends on what the community wants. I mean, really, there's no issues with us distributing them on Ethereum or putting a native NFT module or doing it on another Cosmos chain. So we haven't really finalized that part. But for the other parts of the reward, essentially, it's just that Nibi tokens would be the primary reward. And then the reason we brought stablecoins into the picture is just to make sure that there are ways to incentivize users that aren't allowed to receive the Nibi tokens. So that's what, like when Kevin was touching on earlier with the claim stuff. So the factors that influence the distribution are simply the points that we outline in each announcement. So like, just like this one had a bunch of tasks for like staking, unstaking, Oracle stuff, everything like that. There will be just completing more of the tasks in the other phases of the ITN is how you get more rewards.
Yeah, I think we have a list of points in our blog 7, so it helps detail like the different tasks that you can get, but the future phases of testnet will have a similar like scheme to get points. The next question comes from Ava World. Is the form for NIT, the registration form that was on Gleam, is this the only form to fill in if you're performing within the testnet and running a node, or is there anything else that to fill in?
Yep, more incentivized testnet questions thrown in my way. Yeah, so we have a Google form. You do not have to put any identifying information in it, except for your Nibi address, but that's not really identifying. You only need to fill that form out once, just to kind of register in the system that you're participating in this incentivized testnet, and then we'll take that address and we'll scan the entire block history for tasks that you did. So you'll notice that the tasks that we listed in the incentivized testnet kind of explainer are really easy to track on chain. It's stuff like delegating to a validator, and unstaking and redelegating, etc., and posting a transaction, as like posting a price as a price feeder. So yeah, that will be only required once, and if you change your address, you will have to fill it out again, because we don't really tie your address with the real world identity. And then when it comes time to claim the reward, that's when we'll have the KYC form.
Got it. No, that's good to have. What's the process for becoming a validator in the incentivized testnet? This comes from Robert 10.
Yeah, I can do this one. So to become a validator, first you have to set up a full node. It has to be synced to the tip of the blockchain. So that may or may not take a while if you use the state sync option. And then once you are synced to the tip, you can send a transaction from your own address, your own account, that basically says, hey, I want to be a validator, and you delegate a certain amount. Probably that amount that you initially delegate, your initial stake, will not be enough to send you in the top 100 active validators. So you have to amass more Nibi, testnet Nibi, to become a active validator. But yeah, it's essentially the difference between a full node and a validator node.
I think we lost you.
Yeah.
Okay. We got a couple questions. So here, we got one on liquidity here. I'm concerned about how the protocol intends to become a DeFi hub that powers technological innovations. As a perp DEX and liquidity platform, I think Nibiru is well positioned. To this end, the future of DeFi is in convenient interchain and multi-chain dApps. What plan do you have to go multi-chain and provide liquidity services across all of DeFi?
My other device DC. This is unique. So the IBC integrations give us some low hanging fruit. It'd be awesome if we could provide vaults as a yield bearing application, or ways to easily mesh with chains like Say, Injective, DYDX to some benefit. We also engaged the Axelar team and got practice integrating with them on the testnet last year. I think the overall goal for us from a multi-chain standpoint would be that if you're a user from a blockchain external to Cosmos, let's say Ethereum, for example, you could stumble onto the web application and should see support for like MetaMask, Ledger, and Wallet Connect, and then have some option to push one or two buttons and move assets right to the Cosmos ecosystem.
Okay. Last question we have here is what is the timeline for Mainnet launch, and when can users expect the platform to be fully launched? This is from Robert 10.
Yeah, so that's so the launch would be summer of this year, and then we should have all the tech. I mean, we're aiming to have all the tech done by the beginning of June, so it could be as early as June. Yeah.
Great. Thanks for everyone for joining. We'll have future AMAs in the future on a weekly basis. So we'll both have AMAs for the testnet, as well as with other influencers, investors, and partners. So please stay tuned. Thanks for the engagement today, and great being here with everyone. See you guys.
Thanks, everyone.